A very good evening to all the participants of the DTRTI Lucknow webinars 2021. And today on 8th of November 2020 evening, we are beginning part 3 of the topic Bills of Exchange and Promissory Notes, which is part of our series on bookkeeping and accountancy. Welcome to the DTRTI Lucknow webinars 2021, and I am Arvind Mishra welcoming you on behalf of DTRTI Lucknow to these webinars. Now beginning with or continuing with illustration 2, as we completed up to illustration 1 in the second webinar, and in this third webinar now we are doing illustration 2. Now on 1st January 2016, Ankita has sold some goods for 5 lakh rupees to Bhavika, and since Ankita has sold the goods to Bhavika and has to receive the payment, so she draws the bill at 3 months. At 3 months means it will be paid after 3 months for the amount. For the amount of rupees 5 lakh. Bhavika accepts it. Bhavika is the acceptor of the bill, and she returns it to Ankita. On 1st March 2016, Bhavika retires her acceptance because the bill was for 3 months and it was drawn on 1st of January. So obviously January, February, March, so it was valid up to 31st March, so it would have been paid in the early part of the April. But Bhavika decides to retire her acceptance, that is the premature payment under rebate of 12% per annum. So she is expecting a rebate of 12% per annum if she is retiring the bill 1 month before its expected due date. Now these transactions have to be recorded in the journals of both Ankita and Bhavika. So first of all, we'll write the journal entries in the books of Ankita. And Ankita has sold the goods to Bhavika, so Bhavika's account she is debiting, and she will credit her sales account for 5 lakh rupees. Thereafter, when Bhavika accepts the bill which is drawn by Ankita, Ankita will debit her bills receivable account and credit Bhavika's account. She had debited Bhavika's account, now she is crediting the Bhavika's account and debiting the bills receivable account, which means that now this bill is standing in her favor. Then later on the entry is because entry has to be done for retirement of the bill. So on retirement on 1st March, the rebate, which was 12% per annum, the rebate being given to her at 12% per annum. So which means 1% for a month. So therefore 1% for a month out of 5 lakh comes to 5,000. So rebate will be 5,000. Therefore, instead of 5 lakhs, she will have to pay only 4,95,000 rupees, and the bank account of Ankita is debited by 4,95,000 rupees because Bhavika has made this payment of 4,95,000 rupees to her, and Ankita's bank account is therefore debited to the extent of 4,95,000 rupees and debited, and the rebate of account is also debited for 5,000 rupees for in respect of rebate that is given by Ankita to Bhavika. And on the other hand, the bills receivable account is squared up, which was debited earlier, now it is squared up by crediting it with 5 lakh rupees. On the other hand, in case of Bhavika, it was a purchase, so she had debited her purchase account and credited Ankita because it was a credit sale. it was a credit purchase. Thereafter, when she accepts the bill, she credits her bills payable account and debits Ankita's account. This is an indication that Ankita's debt is over now because the bill has been signed, and so by the bill the promise has been made that after 3 months the payment would be made. Thereafter, the bill gets retired 1 month in advance, so the bill receivable account is now debited, and this is the books of these are books of Bhavika, and therefore the bill which was payable here, it was credited, so in fact it should be bill payable account here, and bills payable account should get debited to the extent of 5 lakh rupees, and should get squared up because the payment has been made. And so here, instead of bills receivable, it should be bank account, and bank account of Bhavika should be credited with rupees 4,95,000 rupees, and on the other hand, the rebate account should be credited with 5,000 rupees because she is getting a rebate of 5,000 rupees, and she is making a payment of 4,95,000 rupees against a bills payable of 5 lakh rupees. So it should be bills payable account debit 5 lakh rupees, rebate account 5,000, and bank account 4,95,000 rupees. So to that extent, the entries out here will stand corrected. Now we go to illustration 3. And illustration 3 says that you have to journalize the transactions in K. Katrak's books. So let us see what are the transactions which have to be journalized. Journalized means they have to be entered in the journal as journal entries. Katrak's acceptance to Basu for 2,500, discharged by a cash payment of 1,000, and a new bill for the balance plus 50 rupees for interest. Now what this means is that Katrak had accepted a bill which was drawn by Basu, and Katrak had accepted that bill for rupees 2,500 rupees, and finally the bill is discharged by a cash payment of 1,000 rupees and another new bill, because an extension in respect of the remaining 1,500 rupees is being sought here, and therefore to the extent of 1,500 rupees, after making the cash payment, this bill is cancelled and a new bill is generated, and for that new bill 50 rupees interest is also paid by Katrak, and the new bill will be in respect of 1,500 rupees, which will be accepted again by Katrak. So let us see how the entries are being made here in K. Katrak's account. So in K. Katrak's account, the entries will be like this: that when K. Katrak had accepted the bill, at that time it was a bills payable for him, so he had credited his bills payable account at that time. But here what is happening is that he is discharging the acceptance. So when he is discharging the acceptance, the bills payable account would be squared up by debiting it by 2,500 rupees. Against this, he is also paying, apart from this, he is also paying an interest. So he will be debiting his interest account to the extent of 50 rupees. On the other hand, he will be crediting his cash account because he has made the payment of cash of 1,000 rupees and a fresh bill that he has accepted for 1,550 rupees, because the fresh bill will be of 1,500 rupees plus 50 rupees in respect of the interest, because that interest payment is not making in cash here, so it is being included in the bill itself. So bills payable account credited with 1,550 rupees, including 50 rupees towards the interest that is being paid by K. Katrak, because he has sought an extension of the payment date by issue of a new bill and by cancellation of the old bill to the extent of 1,500. Now let us see the second part. G. Gupta's acceptance for 4,000, which was endorsed by Katrak to M. Mehta. Now here what is mentioned here is that G. Gupta has accepted a bill for rupees 4,000 rupees. Now when obviously Katrak has written this bill, Katrak is the drawer of the bill, and it was accepted by G. Gupta. Now what Katrak does is that he endorses that bill to M. Mehta. But however, although he has endorsed this bill to Mr. M. Mehta, the bill gets dishonored. And on dishonor, Mehta is paying to rupees 20 noting charges because Mr. Mehta has dishonored the bill. Now, finally, this bill is withdrawn and a check payment is made. So, Mr. G. Gupta was supposed to pay certain amount to Mr. Katrak, and Mr. Katrak drew a bill of 4,000 rupees and gave it to Mr. Gupta. Mr. G. Gupta accepted the bill for rupees 4,000 and sent it back to Mr. Katrak. And thereafter, Mr. Katrak endorsed that bill to Mr. Mehta. But however, on the due date, the bill was dishonored and Mr. Mehta paid rupees 20, which was the noting charges. And finally, the payment was made by Mr. G. Gupta in form of a check for 4,000 rupees. So let us see how the entries are being made here. Mr. G. Gupta's acceptance for rupees 4,000 rupees is being endorsed to Mr. M. Mehta, which was endorsed to Mehta, is now dishonored. So when Mr. G. Gupta's acceptance is dishonored, and we have to write the entries in Mr. Katrak's books. So Mr. Katrak had endorsed Mr. G. Gupta's acceptance of 4,000 to Mr. M. Mehta. But Mr. G. Gupta has dishonored that bill. So Mr. G. Gupta's account will be debited to the extent of 4,000 rupees, plus also the 20 rupees noting charges, because he was the acceptor of the bill. So he has to ultimately bear the noting charges. And against this, Mr. M. Mehta's account is being credited, because Mr. M. Mehta's account was debited when the bill of 4,000 rupees was endorsed to Mr. M. Mehta. But here Mr. M. Mehta's account will be credited by 4,020 rupees, because Mr. M. Mehta should not be bearing any amount here. Therefore, the amount of 20 rupees is also being borne ultimately by Mr. G. Gupta. So we debit Mr. G. Gupta's account and credit Mr. M. Mehta's account for 4,000 plus 20 rupees noting charges. Thereafter, payment is being made to Mr. M. Mehta on withdrawal of the bill earlier received from G. Gupta. Now, what Katrak had done was that he had got the bill from Mr. G. Gupta and endorsed it to Mr. M. Mehta. So now that bill stands dishonored. So Mr. Khattak has to make a payment to Mr. M. Mehta. So therefore, since Mr. M. Mehta should not be bearing the notary charges, because Mr. M. Mehta had gone to collect the payment of the bill to Mr. G. Gupta, but Mr. G. Gupta has dishonored the bill. So he had gone to the notary and paid him rupees 20 and got the bill dishonored entries made duly. And therefore, now the payment has to be made to Mr. Mehta in some other form. So if the payment is made by Mr. Khattak from the bank account by way of check, including the notary charges also, because the notary charges should not have to be borne by Mr. M. Mehta. Ultimately, they have to go to Mr. G. Gupta. Now, so here what is being done is the payment is being made to Mr. Mehta, and of course, in addition, there could be one more entry here that Mr. G. Gupta had accepted the bill. So now Mr. G. Gupta also has to make the payment to Mr. Khattak. So a payment can come from Mr. G. Gupta to Mr. Khattak. That entry could also be there in the journal entry here. Then only the journal entry of this part would have been should have been completed. But anyway, let us go to the third one. Mr. D. Dalal retires a bill for 2000 drawn on him by Khattak for 10 rupees discount. Now, this bill has been drawn by Mr. Khattak, and the drawee is Mr. D. Dalal. And Mr. D. Dalal, however, retires the bill. Retires means he makes a premature payment of that bill for 2000 rupees, and in that process he gets a discount of 10 rupees. So therefore, he makes a payment only of 1990, and he gets a 10 rupees discount. So let us see the Mr. D. Dalal's retirement of the bill entries. So we can see here that Mr. D. Dalal is making the payment to Khattak. So Mr. Khattak's bank account is being debited by 1990, which is a check received from Mr. D. Dalal, and discount is debited by 10 rupees because 10 rupees discount is being given, rebate is being given. It could be rebate account here also. And finally, the bill receivable account in Khattak's books is being finally credited, because earlier the bill receivable account would have been debited when this bill was accepted. Now thereafter, let us go to the fourth entry, and the fourth entry is Khattak's acceptance to Patel for 5000 rupees discharged by Patel. Khattak has accepted a bill from Patel was discharged by Patel. Modi's acceptance to Khattak for a similar amount. So let us see what is happening here. Now let us see what is happening here. In the fourth part, the bill receivable account is debited. The bill receivable from Modi is endorsed to Patel. In the bill receivable from Modi is endorsed to Patel in settlement of the bills payable issued to him earlier. So what is happening here, in fact, is that Actually, Modi's acceptance to Katrak for a similar amount, which means that a bill has been received, as mentioned here. The bill has been received from Modi. It is a bill receivable for Katrak. It means that payment would be received by Katrak from Modi, which means that Katrak has written a bill and that bill has gone to Modi. Modi has accepted the bill. Now, this bill, which was receivable, has been received from Modi. It is endorsed to Patel. Now, Katrak, when receives the bill from Modi, he endorses it to Patel. Why he endorses the bill to Patel? Because he has to make some payment to Patel in the settlement of the bills payable issued to him earlier. Because Katrak has earlier accepted bill to Patel, which means that Patel was the drawer of certain bills and Katrak was the acceptor of those bills. So when Katrak was the acceptor of those bills, for Katrak, those bills were bills payable. So for settlement of those bills, what Katrak does is that he receives some bill from Modi and that he endorses to Patel to make the payment to Patel. So here the entry would be bill receivable account debit and bill payable account debit and bill receivable account credit. So there is a little bit of a problem with the narration out here. So it should be correctly understood. What is happening here is that Katrak has received a bill from Mr. Modi, which means that Katrak has drawn a bill and given to Mr. Modi. Mr. Modi has accepted that bill. So that bill is a bill receivable for Katrak because he is going to get the money against that bill from Mr. Modi. So now when he gets that bill, since he has to make some payment to Patel, instead of making the payment to Patel, he endorses the bill to him in settlement of the bills payable issued to him earlier. So therefore, Katrak is making the payment to Patel by way of the bill which he is receiving from Modi. Now let us go to illustration 4. On 1st January 2016, Vilas is drawing a bill for 10,000 rupees. Vilas draws a bill for 10,000 rupees due for payment after 3 months, and this bill is drawn on Eknath. Now what Eknath does is that Eknath accepts this bill of exchange. Eknath accepts the bill of exchange. Now on 4th of March 2016, what happens is that this was a 3 months bill, but before the expiry of 3 months, like 1 month before the actual expiry, Eknath retires the bill of exchange at a discount of 12% per annum. So 1% per month. Therefore, Eknath retires the bill. He makes a premature payment of the bill. We are